Mortgage rates are really low. The 30-year fixed all summer long has been averaging right around 3%, and that's record low territory. And so you might think, well, that's a pretty good incentive to refinance. And you're probably right if you qualify. Mortgage rates are low. Should you refinance? We'll look at why low mortgage rates are a reason to refinance, other reasons to refinance, and how to know if you should refinance. Lower mortgage rates are a trigger to refinance because, mortgage rates change all the time. When you got your original mortgage, the interest rate might have been a lot higher than it is today. Mortgage rates go up and down year by year, month by month, day by day, even hour by hour. And that means that mortgage rates can hit a low level where you can refinance and save hundreds of dollars a month. A refinance is essentially all you're doing is you're swapping out your old loan with a newer loan with a lower interest rate, and that can save you a lot of money. There's more than just one reason to refinance. Sure, you can do it just to save interest, but also you might want to shorten the term. Let's say you have a 30-year loan, you want to get a 15-year loan, save a whole lot of interest over time. You might want to get rid of FHA mortgage insurance, or you have an adjustable rate mortgage and you want to switch to a fixed rate mortgage, so you know what your payments are going to be in the future. Or you might want to get a cash out refinance, which means that you borrow more than you owe. Then you can take the difference in cash and do some renovations for your house. And life happens. There's a lot of refinances that come out of divorces. So the bottom line is, lower mortgage rates are not the only reason to refinance. So how do you even know if you should refinance? Well, first of all, you need to know why. You need to be able to explain to yourself and to the loan officer why you want to refinance. You need to know about how long you're going to stay in the home. You have to pay fees to refinance, and so you might not recoup those fees if you're going to stay in the home for just a year or two. You can go to NerdWallet's refinance calculator to get an idea of how much you would save every month by refinancing, but kind of the bottom line goes like this. You're kind of a prime candidate to refinance if you can cut your mortgage rate by 0.75 percentage point, if you have 20% equity at least in the home after you refinance, and you have a fairly good credit score. To recap, mortgage rates are at historic lows, so lots of people are refinancing. But there's numerous reasons for refinancing beyond just saving a few dollars every month. Know why you plan to refinance, and make sure that you'll save money in the long term. I'm Holden Lewis, NerdWallet's mortgage expert, and believe it or not, the 2 times we've refinanced this house, my wife is the one who handled it all. If you have any other questions, please comment below, and please subscribe